All right, guys, we're going to go ahead and get started. I want to welcome you all to our Orlando, Florida presentation. Thank you guys for taking the time. We know this will provide valuable insight for you guys on what's going on in the Orlando, Florida market as we see it. As most of you, Orlando is one of the fastest growing metros in the nation. It's also one of the fastest growing states in the nation. It's predicted to grow another 40% over the next 8 years, which for those of you that have been watching some of our other presentations, you'll notice that is very high. And we love growth markets because as people continue to move into markets, I've said this often, but I would rather take a mediocre deal in a great market than look for a great deal in a mediocre market and make the two work. Because if the market turns on you and you went from the hottest market in the nation and one of the fastest growing metros to a slower pace, you're still in one of the better ones because as the other ones decline, as the nation declines in growth and people moving around, you're going to see that start to happen, but less noticeable in the faster growing metro areas. 138 people move to Orlando each day. That's quite an influx. That's just inside the city limits of Orlando. There's a lot of it's a very business friendly state because there's no state income tax on personal income. So a lot of businesses have relocated there for that reason. Great weather year round and home to some of the best public schools in America. Education is always first and foremost in a lot of people's minds right after their jobs, where that's coming from. Looking at the Northwest, that's where we're located in Boise, Idaho. We are seeing a 55% growth there. Sorry, this is just in the Orlando area. So Orlando total is looking at a 40 change in growth. They're looking at 55% of that happening in the Northwest part of the market, lesser in the Southwest. But when you look at where the city is expanding, obviously the new growth is happening in the Southeast and the Northwest. So opposite ends of the city growing outward there. But this is what you're looking at for the next 25 years, 2.5 million people there now. You add 40% to that. Just some quick math tells me there's going to be between 1.5 and 2 million people move into the area over the next 25 years. That's a lot. But here's another thing that I really like. The demographic is a fairly young demographic. When a lot of people think of Florida, they think of retirement communities, they think of an aging population. And while that's nice because aging populations tend to have a little bit more discretionary income, an aging population can also tax resources in an area. And so an average median age of 38 and a half is about 90% of the figure in Florida, which the average age in all of Florida is 42, and the average age across the whole US is 38 and a half. So when you think of Florida being the retirement mecca, if you will, it throws me off a little bit. And I had to look at the statistic a couple of times that we're looking at only 38 years old for the average age in Florida. 51% female. So guys, if you're looking, you got a better than a 50-50 shot in Florida, but the per capita income is low. It's about 90% of the average in the US is 38,000. So it's a little bit low. It's also a little bit lower than what the overall of Florida is for the per capita income. But the median household income is right there with most of the United States. There are 38% of households that are under 100, but on the upside, there are 8% of households over 200,000 a year. So when you're talking about net income or median income, you're talking about a very young population that is on the growth trajectory. And there are a lot of really good things happening, as we're going to talk later on in the slides about some of the growth that we're seeing in that. 43% white, 33% Hispanic, 15% Black, and then a mix of about 10%, 11% of other ethnic groups, which I think looking at it would be what I would expect from my mental assumption of what Florida is. Average median household income, like I said, is $64,000. Median gross rent is $1,650. Average housing costs of 400,000. For me, that states that if you got a median gross rent at 1,600 and average housing costs of 400 in today's market, it's definitely a renter's market. It's definitely one that is doing well for investment type properties because of the disparity of what it would cost to buy a $400,000 house right now and what the rents are in the area. Unemployment rate is super hot, 3%. Averages they consider 5 to be normal, and an average commute time of 25 minutes compared to some of the larger MSAs of 2.5 million people. That's definitely not bad. Let's talk about why people are moving there. You got 138 people a day showing up in Florida. They're moving there because the affordable cost of living, it's 3% below the national average. And we're talking national average. We're talking places like Detroit. We're talking about the Midwest. You do throw in there San Diego and New York City, but the other side of that is to be with this hot of an economy and still have 3% below national average is definitely says something. There's no income, inheritance, or estate tax. So it's a great place for that retirement community to take their assets. Tax exempt on pensions, Social Security, and most retirement accounts. Again, very favorable. Doesn't account for the federal side of things. But Orlando is also a major travel hub. It's got the theme parks, it's got the family friendly activities, it's got a lot of nature in the area to explore, along with plenty of jobs. And it's also a very popular destination for conferences and industry type expos. I think a lot of us have probably been to Orlando in the last couple of years for a trade show of some sort. So I can definitely attest to that. And getting in and out of Orlando is fairly easy because most major airlines do have a hub there. Definitely some of the reasons why they're moving there. This doesn't surprise anybody, really. Actually, what surprised me is the number of people moving there from Seattle, Washington. That is a move clear across the country. I can understand San Francisco a little bit more, but you also have quite a bit of movement from Miami. So they're moving north in there. So one of the largest, the third largest influx is from residents already in the state. And that has 90% to do with affordability issues that Miami is facing. Washington, D.C. also being a major contributor. And we get a lot of our data from the people in the picture here as far as where these trucks are originating from and who's moving into the area and why. It's a major international hub with the airports there. There's 850 flights directly to out every day on 44 different airlines. And the airport serves 135 domestic and international destinations with nonstop flights direct to New York, Charlotte, Los Angeles, Salt Lake, Houston, just to name a few. We can see where let me just point this out. This is where my spell check, this is not Los Angeles, it's Los Angeles. But anyway, I'll just point that out before anybody else does. But when you can get directly out of there to a lot of the other areas, when you're connecting to Denver or Houston, even New York and Atlanta still being the busiest airport in the States, you've got a lot of availability to get a long way very quickly, which makes it a great destination for people when they know that they're going to have a lot of travel involved. Being someone that lives in Boise, Idaho, I always have to connect to a hub in order to go anywhere. I can't really get, unless I'm going direct to Salt Lake or Atlanta or Denver, it's pretty difficult for me to fly direct anywhere. So this is a great opportunity for people to be in a great environment, a great economy, and a great weather area, and still be able to get to places that are maybe a little less desirable, like Denver and New York City in the winter. So definitely something to look at. The city of Orlando was named the largest U.S. travel and tourism city for 2022, with names like Universal Studios, SeaWorld, Gatorland. I've actually driven by. Very interesting place. Maybe if you're there, you should check it out. But with tourism generating over $75 billion last year, it represents 20% of the city's total gross domestic product. By example, this was 3 years ago, I was at a meeting in Puerto Rico, in San Juan, Puerto Rico, and the mayor of San Juan, actually the governor of Puerto Rico, was there, and he was talking, and Puerto Rico was generating 7% of its GDP in tourism, where Orlando has pushed that to over 20%. Is a pretty phenomenal amount Also letting you know that the whole GDP of the Orlando area is over 200 billion dollars, a very vibrant economy for 2.5 million people. Corporate income tax is at 5.5% compared to New York City or New York at 7.25, and California at 8.8% corporate tax. That's on top of the federal, along with zero personal income tax. It's very, very affordable because more of your disposable income is retained in the household. The other one I thought was pretty decent was the Class A office rents. City of Orlando is running around $29 a square foot compared to Tampa at 35. Here in Boise, we're in the low 20s. So very strong comparison when you look at all the other things. And as we look at the return to work, I know everybody's talking about how office is on the downturn. You're going to see places move when you see rates and rents collapse in areas like Houston, areas like New York City. They're going to have to get competitive with where people are already paying rent at $29 a foot. That's going to be a substantial decrease. And I think you're going to see a lot more vacancies in larger markets where cities have, or corporations have just moved to cities like Florida or like Orlando because they can take advantage of that. There's also tax credits. This is a very forward thinking city whose city planners have offered tax credits for employers who provide jobs in the local area. All of these things add up to more and more reasons why people are going to want to move into that area with business and other things like that, because it really is such a strong growth area, low cost of living, and affordable rental space in a lot of the classes of commercial real estate that people are really looking for when they're expanding businesses or moving businesses. There are some exclusions for capital gains tax if you reinvest them into your business. This is something that, again, the federal government doesn't necessarily recognize, but Florida does. And that makes it very pro business. So you can sell a property, you can avoid the capital gains tax on the state side and reinvest that in your business. Again, I think that's very forward thinking because taking you're taking things that maybe you were going to reinvest it in real estate, which also provides additional tax benefits for municipalities, but they're allowing you to put it into businesses, which has a direct stimulus to wage, to employment, and helps keep those up in those ranges that we saw earlier in 3% for unemployment. Also, the city of Orlando will match building and shop front improvements up to $50,000 in high traffic areas. Again, maybe that's not a lot, but maybe it's enough that creates incentive that a lot of other cities aren't doing, as well as additional grants that are there to offset construction development fees. A large amount of the commercial availability from venture capitalists and angel investors in the city. It's known in my world as a hub for those that are looking to be in the venture capital space. I can't think of a better Shark Tank environment than sitting on the beach or being in a tropical warm environment in the middle of winter rather than trying to do deals from some high rise in New York City while you're freezing your cojones off. So I can definitely see why VC money is hanging out there. Let's see the taxes, the individual tax burden breakdown. If you look at the Tax Foundation, they rank Florida as number 4 overall in the 2023 State Business Tax Climate Index. With zero state income tax, the average combined local and state taxes are 7.2%. Property tax is a big one. We often hear about Texas no income tax, but their property tax is where they make up for it. And so when you look at this property tax being less than 1%, you're still in a very good area to make investments both in property and business. Average local sales tax is at 1% on top of the 6% state sales tax, which is where you get your combined 7.02. And then a low corporate income tax of 5.5%. I know even here in Idaho, it's higher than that on the corporate side. Higher education is always a major factor as far as growth goes. There's alumni and everything that go with that, but there's University of Central Florida. It's got a research department in the university that's ranked in the top 20 in the nation. Rollins College, the nation's top 50 best private colleges. Full Sail University, they provide a lot of education for those pursuing entertainment, and acting careers. And then Orlando is also highly desirable for graduates from greater Florida to move to because of the affordability and the unemployment rate. So when you're looking at all of that, you're seeing a very strong case for people moving into the area. And a lot of times people will move into the area for college. Part of their college program will include them getting an internship. They'll do the internship, they'll go to work there thinking it's only going to be a couple of years. 20 years later, they are still there and enjoying that great Florida economy that we're seeing, especially in the Orlando area. It's got a great reputation for being built on tourism. I think one of the first things I think about when I think about Orlando is Disney World, Disneyland, Legoland, all of those. But 80% of the jobs in the Orlando area are from outside the tourism industry. The healthcare, obviously very strong, 16 hospitals and emergency rooms with over 3,000 physicians. And then the Advent Health has more than 20 hospitals. So there's a combined of over 35 hospitals in the area with over 6,000 physicians. Obviously, we know the Kennedy Space Center, which is only 50 minutes from downtown Orlando, and that's home to NASA, SpaceX, Blue Origin, and the United Launch Alliance. So that kind of creates it with their great weather, the community that they have down there with the affinity with the aviation industry. It's really become quite a hub for a lot of launches. I know that SpaceX does a lot from there, and I've been to some of the NASA facilities that are down there. Pretty incredible. It's also ranked in the top as the number one city for science, technology, engineering, and mathematics job growth, STEM growth. That was as of 2018. I think that title now belongs to Raleigh Durham, but to have had that title means that you're very forward thinking and you've got a lot going on in the tech space and the engineering space. Some of that obviously connected to the aerospace and aviation industries. Worldwide Corporation is a huge hospitality service. We probably know Wyndham best for its timeshares, but it operates in three segments and employs 37,000 people with an annual revenue of $5.2 billion. That obviously would seem to fit with an area that is strong in the hospitality and tourism space, but it surprises me that there's 37,000 people in Wyndham worldwide, but their headquarters is in Orlando. So a lot of that strong growth, those are mostly office jobs. They're not blue collar jobs. They tend to have higher employment costs to them. A company like Wyndham is probably also very interested in employee retention. All of that makes a good case for mid to high level executive jobs. Darden Restaurants. Let's see, we've got Olive Garden, we've got Longhorn Steakhouse, we do have the Yard House. I think that's it for here in Boise, but these are national restaurants that are, again, headquartered in, we also have a Red Lobster among those that are headquartered in Orlando. $9.6 billion in revenue. So when you think about headquarters, back to that 5.5% tax, that is huge for the area because of the jobs that are created there. Not so much at the server and the cook level, but at the administrative level. And of those 175,000 employees, quite a few of them are in the headquarters there. Quite an impressive list of companies or list of restaurants, and most of them are very well known. And just the sheer number that are spread out across the nation, all being headquartered out of Orlando, speaks to to me, when you start to see corporations like this headquartered in a certain place, it speaks to the value that people find in being located in certain areas with certain politics around that. And when I talk about politics, it's not about Democrat or Republican, which side of the aisle are you on? It's about the politics around business. How hard is it to maintain and run a business? What happens in the area as far as tax incentives and things like that? So you definitely have a very strong following in that area. Let's not forget about Disney, right? There's 75,000 people in the local Orlando economy that are employed by Disney. And of the $75 billion in annual tourism revenue that's created, 18 billion of that is right there in Walt Disney World. So when you hear about DeSantis challenging Disney, they are 2.5 of all of Florida's GDP and they have over 75,000 employees in Orlando. But their attractions attract 58 million visitors annually. That's a lot of dinners out. That's a lot of car rentals, a lot of hotel rooms. So they're getting a lot of their tax dollars from those that are not in the economy that are coming with discretionary funds to the economy, which make for a very strong revenue stream. Even when we go through recessions, people are still looking to recreate instead of going to the Bahamas or going to Costa Rica. They're going to go a little bit shorter, but they're definitely going to recreate, and they're still going to see 58 million visitors a year join them to do that recreation. Universal Studios employs another 28,000, and they've brought in $73 billion to the Orlando economy since 1990. They've recently completed a new expansion that is anticipated to add another $11.5 billion in direct and indirect benefit to the Florida economy. So they're looking to add almost double the size. They're looking to one third increase the size of their staff with another 14,000 jobs that are scheduled to open in the summer of 25. So again, you're seeing that strong bet placed on the entertainment side of the world as to where things are going with the Florida economy, especially Orlando. There's a lot of new developments. 398 North is a mixed use development. It's a 24-story office and residential space with 8 stories of integrated parking, along with some ground floor retail, 300 residential units, 130,000 square feet of high tech office space to offset the 10,000 square feet of retail space that you see in this one development. And I've actually been by and seen this building, and it's pretty spectacular and very well done in the downtown core, adding value there. JW Marriott has finished actually they're in the middle of construction on a hotel and convention center, which is a 33-story development that has a convention center in the middle. The construction timeline has been released, and they are planning to start that next year. And that is at 319 Church Street, which is literally downtown Orlando. Pretty big things happening there as far as what is going on, as far as new developments coming into the area. Magnolia is another one, 232 units of apartments. These are not Class B or C apartments. These are definitely A+ apartments with 6,000 square feet of retail space and a 280 space garage. So when you look at that, it also, to me, speaks to the commutability of Orlando, because you've got 232 apartments and only 280 spaces with 16,000 square feet of office and another 6 of retail. You've got a pretty connected city that isn't relying on a lot of this parking for its residents. Information tech is seeing a 3.9% job growth when we look at office jobs and break it down by the industry. The property type, you can look and see that there's been a negative net absorption in the B and C class properties, but there's been positive absorption in the A class. To me, that speaks to the quality and the caliber of the office space that's moving into the area. They're high tech. Typically, tech likes to take out the new space, the higher rent districts. Financial firms, angel investors, things like that are going to want into that higher investment, that higher dollar amount. And you're looking at that being there's 27 buildings for 7 million square feet versus 79 buildings for 3.5 million square feet. So when you're looking at that, you're seeing a lot of really vibrant things happening. Total vacancy rate is still a little bit higher than what we'd like to see. However, when you look at the national average and where things are at for the office space, I think the net absorption is showing that people are not returning to work right away, but you're seeing net absorption in the Class A space. Financial activities have grown by about 8%, and the professional and business services have grown by over 15%. And so that's also projected to continue to grow into the next 8 years. For the remainder of this decade, you're going to see strong office growth in that area, even though you have seen in 2023 year to date a negative almost 500,000 square feet of absorption in that marketplace. Some mixed signals in office, but right now, come on, guys, who's not seeing mixed signals in office? Construction deliveries are notably down and sales are down even a little bit farther than that. We can see the COVID spike in 21. The deliveries were 3 million square feet, but the demand was over 5.5 million square feet. And this is where I think sometimes, guys, statistically, they're not correct. Excuse me, I'm struggling with the yawns here. Statistically, you can look at it and say net absorption is down, but look at how much was delivered in 21 and 22. 2016 and 2018 proved to be equally good. But when you look at the net absorption in 19, you see a dramatic decrease on the net absorption after they had quite a bit delivered. And so when you look at 20 and 21 not being as robust in the deliveries, you can see where that came from because there was a lot delivered in 19, but not a ton of it was absorbed, about 1 million square feet on 3.5 million square feet in deliveries. We can see that asking rates on industrial peaked in 19. Since then, they've come down substantially. The asking rents are 10 and a half. Sorry, vacancy is down to 3%, while asking price has gone from 7 to 11. So you've seen substantial rent growth in the industrial market. So that is a strong indicator things are being absorbed. You don't have rent growth when absorption isn't coming directly after it. Definitely something to look at and be aware of, because that speaks to that's business. That's not office, that's business. That's tile showrooms and things like that that have need for warehouse space, and car dealerships and things like that all fit into that industrial rate. Multifamily has seen massive growth across the nation, and the Orlando market is no different. We can see the deliveries and the absorption have been very closely tied together over the last 3 years, getting out of control on the absorption in 21, coming back into check in 22, seeing more of that in 23, but they project in 24 and 25 that we're going to be fairly close to even. But they've experienced significantly higher renter demand even after they make accounts for the seasonal adjustment. But the growth is coming from inbound migration as well as household formation. And those all lead us back to the thought that there is a lot of strong fundamentals in the market. When you've got inbound traffic, they're going to need jobs, they're going to need places to gas their cars up, get them washed, service centers, all those kinds of things are all going to be part of that. Part of that number. So you can see the numbers reflect just how intense multifamily has been as far as a growth spurt in the area, with rents really coming up in 21, sliding off in 19 a bit, but still seeing solid rent growth. When you're looking at 19, rent growth was over 25%. Now that it's slacked back off into the single digits, that may look terrible when you look at this graph, but overall it's pretty incredible and substantial. So guys, as we conclude this, I want to tell you that I think Orlando is a strong market. It's one that I would look to invest in, both industrial and multifamily, as the job market is strong. Median income is great for blue collar workers, as far as people looking to expand their business, needing more blue collar workers. Also fairly strong in the biotech market, which is going to allow for some class A to be built. Typically, I would hesitate to build class A, new class A, in a market that's showing a under $40,000 median income. But the level that they have seen accelerated rents on the level of rent that they're at currently at 1650 allows me to believe that there is a lot of good things going on. The fundamentals are very strong that would predicate a strong market of growth in the area. There's also a lot of investment coming to the area. I think everybody knows somebody that's invested in Florida. Combine that with its high access to capital for investors, its strong population growth at 138 people a day, business-friendly environment, and a growing professional sector that will eventually offset the decline in office rents, in my beliefs. So when you're looking at this market, you can definitely see why a lot of people like it. There's a lot to like about it. And it's one that we are definitely considering for some other investments that we're looking to do. So, guys, if you're interested in more information on this, definitely let us know. Reach out to us. Christy or Isaac are going to throw a link in there where you can get to info at and or Christy at Investor Relations, and we can talk with you more about what our plans are for the Orlando market. but we really see it as a strong market that deserves consideration when you're looking at a real estate investment portfolio because of the continued growth that's going to happen. So with that, guys, I'm going to open it up for questions. If you want to jump into the chat, Christy's got her link in there for you to schedule a call with her, talk more about the Orlando market or any of the other market studies that we have done and what we're going on with from there. So we're going to open it up, guys. If you've got questions about the presentation, I want to thank you for showing up and diving into this with us. We will go ahead and send out a copy of the video for you so that if there's something you wanted to go back and rewatch and highlight, you definitely have an opportunity to look at that. And we'll give a couple more minutes here for questions before we sign off. And thank you guys again for coming. Don't everybody jump at once. It means that our research department did a great job on this, I'm going to assume. Guys, with that, I'm going to go ahead with no questions, let you guys get back to your afternoon. Thank you once again for showing up here and checking out our market insights at Shannon Robnett Industries. Again, if you've got any other questions, feel free to reach out to Christy or info@shannonrobnett.com. We'd love to help assist you in anything you might have as far as your real estate journey. Thanks again, guys. We're signing off.